was this person has now started making profit, so meaning that he has triumphed the challenges of the challenges encountered in the business. Well, so you are going to prepare his balance sheet. Unfortunately, we are not going to continue with the question that we have been presented to us on the income statement for reasons best known to me. But in other tutorials to come, we will have a question where you will see me starting with the income statement and ending with the balance sheet. There are more complicated questions that we will do apart from the ones that we are doing. This is just an introduction to the real world of accounting. So we're going to prepare a balance sheet. We have been presented with a problem. We have another trial balance here. It's more like a trial balance, but yeah, it's more like a trial balance. So we've been asked to prepare Emutobo's income balance sheet as at 14 November 2014. 14 November 2014. So again, you write the title. The title is very important. So for the income statement, you say you mention the name of the sole trader, and then you say this person's income statement for the year ended. But with the balance sheet, it's different. There you say, so for example, Mutobo is a sole trader. We say Mutobo's balance sheet as at. So that's the difference between the income statement and the balance sheet when it comes to the titles. The one ends with for the year ended, and the other one ends with as at that date. So we say Mutobo's balance sheet as at 14 November 2014. You underline it properly. You underline it properly. So now, I'm going to write the balance sheet. Balance sheet like this. There's 3 columns. That column. That other column there. This one is big, too big. Okay, no problem. Okay, so we'll start with the. Okay, let me introduce this format. I think this is the format that I was using back then, like when I was at school, like some good 10 years ago. So here we are starting with the cost. The cost, the depreciation, and the net book value. And then you put up the currencies depending on the country where you live. So now, we're going to start with as usual, we're going to start with the non-current assets or the fixed assets. Non-current assets or the fixed assets. Non-current assets, just a fixed assets. Why are you wasting time writing that non-current? The wait is just too long for me. So we have the fixed assets. Now, I've introduced something new here. There's the cost, depreciation, and net book value. I had explained depreciation. So let's say if we have, land. So you indicate the total cost for that land. The total cost for that land. And then the cost, like the amount of money that you bought that asset at. So if you bought land at 40 kwacha, you put 40 kwacha here. If it has depreciated by a certain amount in that particular year, you indicate it, you put it here, and it will be deducted from the total cost. So whatever figure that you have after subtracting the depreciation, the value of depreciation from the original value, the value that you get from the cost at which you bought that value, the value that you get is what is called the net book value. So now if you bought land at 40 kwacha start depreciate by 10 kwacha by 10,000 muli ino nishia 10,000 mwa life ni akuli 40 kwacha, and then 30,000 joto wala yiko kwazi net book value. So that's what happens. So like in this question, there is no depreciation. Like in this question for the balance sheet, ones that I have for the balance sheet, there is no depreciation. So here we are not going to put anything. So under fixed assets, we have fixtures. Fixtures. Spelling correct. You bear with me, my handwriting is very bad. So try to wear glasses if you have got problems with eyes. Otherwise, won't be seeing anything. You'll be seeing Chinese here. So fixed assets or fixtures, the total figure for fixtures is 2,100. Is it? No, it's not 2,000. It's 2,000. So there is no depreciation. It has not depreciated, so we won't put anything here. So this will also be the net book value. You have a net book value of 2,000. Under that, I think we just have two fixed assets. We have motor vehicle. Motor vehicle is in Bayamba. Don't know where the members got that name from. So motor vehicle have the value of 5,000. So it has not depreciated as well. So the net book value will also be 5,000. So these are the only fixed assets that we have. When you sum this up, so here we have nothing. Here it will be 7,000. Even here we have 7,000. So after that, you now go for the current assets. Current assets. So under current assets, we have stock. So we have stock. We have bank. We have cash. So we have stock. Stock, we have 3,500. Under stock, we have 3,500. Bank, we have 2,800.